Assalamualaikum warahmatullahi wabarakatuh, and hi, my name is Rabihatus Saadah binti Ahmad. My metric number is 2019310415. In this video, I would like to talk about my individual assignment which I have done about FinTech. So now, let's move on to the video.
Firstly, let's take a look on what is FinTech.
FinTech is a combination from both financial and technology. FinTech is actually a comparatively recent and somewhat ambiguous phrase that refers to any developing technology that enable customer or commercial bank to supply banking services in better ways than previously. FinTech also distinguishes the relationship between going into a bank to inquire about your balance and also being able to access that information in real time through your phone. And now let's see to the next point, which is about why bank embark into FinTech. So the first reason why bank embark into FinTech is because FinTech is expertise of existing businesses process in order to resolve problems and seize chances. Banking firms should undertake a current iteration to review of their current processes to discover opportunities for improvement and also particular functional difficulties, inefficiencies, and also possible challenges. The potential of FinTech is to assist fill the gap is a vital metric of long-term success. Therefore, the present condition evaluations is always the driving factor behind the formulations of a FinTech strategy. Secondly, FinTech have the ability to recognize signs of change. FinTech encompasses a wide range of topics, including data analytics and artificial intelligence (AI), as well as innovative technology systems and new business model. Top companies watch FinTech operations undertaken by enterprise, both downstream and upstream in the value chain by rival and by large technological giants such as Google, Microsoft, Amazon, and Alibaba in order to remain on top of the market signal of change. Thirdly, FinTech is considered as a long-term planning. Rather than focusing on particular FinTech goals, great financial institutions have a long-term vision of where they want to go in 3, 5, or 10 years, from customer service to operational efficiency. Next, to develop a FinTech strategy that is in line with a company's overall goals. Choosing where and how to play and how to win in FinTech require a true grasp of where a business is now and where it intends to be in future, as well as an awareness of transition indicators and international change preparedness. The last reason why banks embark into FinTech is an organization's ability to adapt to innovation. The capacity to obtain staff buy-in for specific improvement can help or hinder a FinTech strategy's effectiveness. Companies must synchronize both the employee experience and the customer experience, which are referred to as the organization spine according to 2017 US Customer Experience Excellence Analysis Report. Business transformation is shaped by environment, which is an unseen force. It has the ability to either expedite or detail transformation efforts. And now, let's see the effect of FinTech in Malaysia. Firstly, FinTech services are rapidly disrupting bank services throughout the world. Malaysia's banking sector has been disrupted as more FinTech companies develop new FinTech services to increase the comfort of their customer. In terms of FinTech, Malaysia is a flavored segment in Southeast Asia. Last year, the country created a legal sandbox to allow startups and banks to test innovative product and business model in a safe environment. All FinTech companies, even those that have yet to make an impact in Malaysia, are welcome to participate in this regulatory sandbox. The Financial Technology Enabler Group (FTEG) of the Central Bank was established in June 2016 with the goal of articulating and improving regulatory policies to promote the adoption of technology advance in the Malaysian financial services industry. The FTG is a cross-functional group within BNM that aims to support innovation that will improve the efficiency, quality, and availability of financial services in Malaysia. So the first bank to use SMS banking was Bank Islam Malaysia Berhad. In the present context, however, nearly all commercial banks now provide mobile banking to their consumer. Users of Hong Leong Bank Berhad were offered a services called PEX, which is Payment Express, an application that allow users to withdraw money by only entering their mobile number rather than their banking information. This solution will make easier for Hong Leong Bank clients to move funds to other Malaysian banks. And now, let's move on to the example of FinTech. Firstly is digital lending and credit. Cabbage, a FinTech behemoth, provides small business loan immediately and use commercial information to make lightning fast loan choices. Lending Club use peer-to-peer borrowing to allow customers to give loans to one another for business projects without any of the participations of a traditional commercial bank. The utilizations of big data and high analytics throughout online platform has enabled each of these development. The second example of FinTech is mobile banking. With the increased demand for digital banking between customers, several commercial banks are implementing or extending their internet banking abilities. On their platform, numerous banking institutions today have some kind of internet banking functionality. Next is mobile payment. For someone under the age of 30, they will probably pay using smartphone apps that have become an easy method to go. Peer-to-peer systems like Venmo have emerged to substitute traditional payment methods since we have evolved from an income society to one that is increasingly digital. In reality, digital-level transactions are expected to reach $5 billion globally in 2018. The next one is cryptocurrencies and blockchain. Customer buying or selling cryptocurrencies such as Bitcoin has already been capable to connecting through cryptocurrency exchange. By storing origin data into system, blockchain technology have tried to prevent fraud. The next one is insurance. InsurTech is the application of technology to the insurance sector in order to maximize saving and efficiency. InsurTech are revolutionizing the insurance consumer experience by streamlining time-consuming operations, including underwriting, claim processing, and instant implementation. The next one is trading. The introduction of FinTech has enhanced trading and investing. Without such aid of AI technologies, big data information is frequently unorganized and illegible. These technologies can filter through large information and derive insight from data in time utilizing natural language processing. And the last one is budgeting apps. Consumer planning apps that have increased in popularity significantly over the year are among the most main usage of FinTech in 2019. Users used to have to make their own budget, collect checks, and traverse Excel spreadsheets to maintain track of transactions. And the next point is about FinTech initiative taken by international Islamic financial institutions. The first one is Global Islamic FinTech Hub. Future Finance 2030, the first global Islamic FinTech Hub, was launched by Finocracy and is intended to be the main focus of the rapidly developing Islamic FinTech industry. The FinTech Hub will be located inside CH9, a company accelerator that aims to improve Bahrain's and the GCC region's entrepreneurial environment. Future Finance 2030, which is scheduled to be released in the first quarter of 2017, will feature essential components that will continue to promote the strong development of Islamic FinTech while also strengthening the industry's overall connectedness. The second one is Islamic Crowdfunding. There are some examples of fintech businesses that run Islamic crowdfunding platform as well as their operating countries and expertise. Some of these Islamic crowdfunding platforms have grown more well-known than others, winning important prizes in the process. For example, in September 2016, Crowd was named as Best Islamic Crowdfunding Platform at the 6th Global Islamic Finance Award event. In 2015, Norway received the Ethical Finance Innovation Award from Thomson Reuters and Abu Dhabi Islamic Bank. And in 2016, the Al-Huda Center of Islamic Banking and Economic awarded in the Best Islamic FinTech for Microfinance. And the last one is Islamic Robo-Advisor. Wahid Investment Incorporated, located in New York, developed Wahid, the world's first automated Islamic investment platform with the goal of offering access to crucial portfolio management for the world's 2 billion Muslims. Wahid provides a reduced minimum commitment of $7,500 in addition to being the world's first automated ethical investment platform. Now let's take a look to FinTech initiative taken by Islamic financial institution in Malaysia. The first one is Investment Account Platform (IAP). On February 17, 2016, the IAP, Malaysia's first multi-bank platform for financial intermediations in the Islamic financial system, was established. The IAP, which is owned by a group of 6 Malaysian Islamic banks, which is Bank Islam, Bank Muamalat, Afiq Islamic, Maybank Islamic, Bank Kerjasama Rakyat, and Bank Simpanan Nasional, serve as a central marketplace for financing small and medium enterprise (SME) with an initial capital of 150 million ringgit. The second initiative is Sharia-compliant peer-to-peer crowdfunding. In November 2016, the Security Commission Malaysia granted Etis Capital the world's first Sharia-compliant P2P license. Small companies and real estate development initiatives are the emphasis of Etis Capital. Etis Capital is part of Etis Venture, which creates, operates, and launches ethical and Islamic crowdfunding platforms along with 7 similar platforms. Etis Capital intends to focus on helping and expanding Malaysia's Islamic finance industry with the goal of eventually being a major worldwide player. The last initiative is Islamic FinTech Alliance. On April 1, 2016, the Islamic FinTech Alliance (IFT Alliance) was formed in Kuala Lumpur, Malaysia by 8 Islamic crowdfunding platform providers from all over the world. Blossom Finance, Easy Up, Etis Crowd, Narwi, Funding Lab, Capital Boost, Launch Good, and Scholar Fund are among the founding members. This alliance have a 3 main goal, which is to foster safety and trust by creating, advocating, and also implementing common Islamic financial norms. Now let's take a look to a challenge that faced by financial institutions. The first challenge is it's possible that new frauds and fraud tactics may arise. P2P lending or peer-to-peer lending provide ease by allowing credit approval to be given in minutes depending on individual information and phone number. However, in compared to IFI financing, the costs imposed are substantially greater. Furthermore, if a borrower defaults, lender may use drastic steps to compel repayment. The second challenge is unbanked population might come from a lack of financial infrastructure. In the United States, potential customers can create bank or investment account by merely providing certain personal details, which is then immediately compared to government database. If all the information is correct and authentic, the customer's account is nearly instantly established. The next one, due to a lack of knowledge, AI may drive customers to purchase items or services they do not require. Because of the algorithm's limitation, the rise of AI in the financial services business, where robo-advisory, for example, can be used in wealth management, can possibly recommend the wrong goods or services. Next, FinTech laws that are too strict will hinder growth. Many countries are beginning to regulate FinTech as a result of its rising scale and importance, as well as the potential risks from cybercriminal, extremism, and financial fraud. IFI must accept this truth. Compliance with extra regulation can be costly and difficult for IFI who may not have the necessary expertise in this area. The next challenge is privacy and security are at risk. This is a critical problem right now. Given the rising frequency of a cybersecurity incident in recent years, the sufficiency of present security standards and processes is being questioned. According to PwC Global State of Information Security Survey 2016, the number of security incidents discovered worldwide increased by 38% in 2015 compared to 2014. The last challenge is market share has shrunk and consumer turnover has grown. FinTech enable personalized and digital alternatives such as Robo-Advisor and peer-to-peer financing marketplace that are inexpensive, simple to use and easily accessed. As a consequence, market share is lost. So now let's go to the future of FinTech. The first one is AI and data analytics. Despite the fact that emerging nations have extremely limited credit history, data analytics may be used to determine creditworthiness. Internet online activities, social media engagement, application actual age, call operation, phone camera, and location tagging are all examples of data points that might be gathered.
The next future of FinTech is mobile payment, peer-to-peer finance, and open banking. Money paid using smartphone application or USSD in regular smartphones can access even the most remote locations as long as they have phone or internet access. Everyone around the society might support potential individual or SME candidates with the help of peer-to-peer funding. Launch banking enhance the end-user experience and allow users of mobile payment and peer-to-peer lending firms to immediately access data about their financial institution without having to open online banking or to go to bank website.
Next is distributed ledgers. For validations and safety issues, every funding activity can be documented on a blockchain ledger. This is also provide a track of financial and enhanced payback prediction skill. In the end, this will allow risk to be properly valued in respect of the finance given and the costs associated with it. Repayment can be made on time will improve credit rating, resulting in lower return restriction and processing costs. The next one is cloud. Without the requirement for on-site server, cloud technology will allow financial institutions or fintech businesses providing Islamic financing to operate their business utilizing cloud-based software maintained by third parties. This will allow companies to start operating right away without having to pay for the development of a technological infrastructure. The next one is cybersecurity. In order to handle the threat of cyber criminals such as privacy violation, identity fraud, financial fraud, and server breakdown, FinTech progress need sophisticated cybersecurity technologies. Cybersecurity also will assist Islamic finance firms in complying with rules pertaining to sanctions, anti-money laundering, counter-terrorist financing, fraud, and also bribery. The last one is momentum of Takaful. In order to conquer the Muslim insurance industry, Takaful need to gain momentum and innovate. According to studies, the unbanked also seek wealth and health protection, but are unable to get relevant products owing to increasing prices and other factors that can lead to their classifications as undeserved in the first place. As a conclusion, FinTech has obviously assumed a major position in the financial industry as it has proven to be a key participant in the industry and the added value it brings cannot be ignored. Thus, Islamic financial institutions in particular must respond appropriately. Because of technology advance at a breakneck speed, financial important players must move in order to prevent losing market share. Because of Islamic FinTech is still in its infancy, it is attempting to catch up the fast-paced development of the global fintech environment, which has grown in recent years.
So I think that's all from me. Thank you.